Assalamualaikum students, my name is Faizan Farooq and welcome to my YouTube channel. In today's video, we are going to discuss the past papers which relates to the topic called accounting concepts or accounting principles. As in your studies, you definitely gone through with accounting principles like consistency, duality, materiality, prudence, going concern, accrual, and a lot. Here we are going to see how the examiner is going to test these concepts in your paper. So let's start. But before start, if you still don't subscribe to my channel, please do so now and then watch till video till end. The first question at your screen, what does it say? A company decided not to capitalize the purchase of a stapler for use in office. What does this mean? Stapler is not an expensive item. So, in order to decide which item will be a non-current asset, should be a non-current asset, and which item should not be recorded as a non-current asset, it's called the limit. Company has to decide a limit. And this limit we can say is the materiality concept. That company has to define a limit. Above the limit, it will be an asset. Below the limit, it's an expense. Same thing happening in this question. So the answer for this particular question seems to be option C. C, yani materiality. The next question will appear at your screen in a second. The next question, again, which accounting principle has been applied? We have to think. A calculator costs $9.5. Okay, $9.5 and has a useful life of 5 years. A bookkeeper decided to record it as a revenue expense. Revenue expense means income statement expense. Again, the same thing, same type, same answer. $9.5. It should be an asset or it should be an expense. Revenue expense means income statement or SOCI or P&L expense. In order to decide, company has to define its materiality limit. So the answer for this question is option B. Same thing. Question number 3 will appear at your screen in a second. Now, what does this say? Inventories are valued at lower of cost or NRV. Lower of cost or NRV. Why we are recording inventories at lower of cost or net realizable value? Net realizable value means selling price minus expense to sale. Why we do so? Because if inventory have problem means damage or any other issues. If inventory have any problems, we are recording it at lower of cost or NRV. And this concept means we are recording a foreseeable or forecasted expense. Lower of cost or NRV means it is a problem in inventory. And we are recording the problem right now, means what we learned in our classes, that expected expense must be recorded right now, but income should not be recorded until it's not realized. So the answer is prudence, and prudence is the concept which says that if you have expected expense, you must record it right now, and income, you should not record any income until it's not realized. And recording a problematic inventory at lower of, yani recording a loss right now, is prudence concept. The next question is business values in inventory at lower of cost, or NRV. Which accounting concept is that one? Again, the same question, the different past paper. So the answer is prudence for this particular question. The next question will appear at your screen in a second. Before we discuss the next question, think about going concern. What is in your mind regarding the concept going concern? Going concern means the business will continue its existence in foreseeable future. Am I right? Is this the concept you learned? You learned in your studies. So you must say yes, sir. Going concern is business will continue in foreseeable future. Okay, now option A, read it. B, read it. C, read. D, the business will continue its operation in existence in our foreseeable future. Foreseeable future means next 12 months. So what should be the answer for this particular question? The answer is supposed to be option D. D for duck. The next question is, a sole trader pays private expenses. Okay, very good. From the business bank account. Why he need to record it as a separately recording as drawings? We learned business is separate and owner is separate. Business is separate, owner is separate. We are doing accounting for business, not for the owner. Which concept is that one? That is business entity concept. Why we are recording drawings? Because business is separate entity from its owner. So the answer supposed to be A, business entity concept. The next question, going concern. Just check option A, B, C, D and think, what do you think? What is coming in your mind? Which option? Going concern means business will continue its existence in foreseeable future. Is it B? All of you who are watching my video, what's the answer? Is it B? Yes, it is. So the answer is B. Next question, when a businessman introduces capital into business, this transaction is debited in cash book and credited to capital account. Why? Because business is separate entity from its owner. That's why we are recording drawings and capital separately. Owner accounting is different, business accounting is different. It's called business entity concept. They didn't write the full name business entity concept. They just wrote entity concept. So it's same thing. Option is A for apple. The next question will appear at your screen in a second. The question is, business anticipated loss but not profit in their annual accounts. Yani, this means business can allowed to record a expected loss but not allowed to record any expected income. Which concept is that one? In just before 2-3 questions we discussed prudence. You are allowed to record expected or anticipated expenses or losses, but profit not allowed until they are not realized. It's prudence concept. The next is substance over form. What is substance over form? Anyone? Substance over form means the accounting is not following law. Law in the sense legal ownership is something different. But for accounting, the asset recording of asset is in accordance with IAS and IFRS, the rules of accounting. And the only example which we are using to understand substance over form is hire purchase agreement. In the case of leasing agreement, as per the law, a person who is giving you an asset on lease, he is the owner. But in accordance with the IFRS and IAS international accounting standards regarding lease, a person who is using the asset must record the asset in his books, in his balance sheet, as right to use an asset. So here the accounting is saying something different and the law ownership is something different. And this is called substance over form. You have to remember that hire purchase agreements are the example of substance over form, where legal ownership is something different and the accounting is recording this asset in some other person's book. So the option, if you read, it should be what? A, B, C, D. So it's simply and easy is B. Hire purchase agreement, recording an asset under hire purchase agreement as a fixed asset is the best and only example of substance over form in your course. Then I want to remind you matching concept. What is matching concept? Your expenses and income must be matched against each other. Am I right? Did you remember that? So now matching principle illustration example. Expense on fixed asset, because from asset we are earning, so we have to record an expense. Yes, it is the illustration. Revaluation is a gain or loss. It's not a expense of use, cannot be the answer. Depreciation using reducing balance method. Record the high depreciation because we are earning or we are getting economic benefit from the asset at a higher rate. That's why we are recording the depreciation at higher rate at early years and then lower it down. It is the example of matching concept. Any expense must be matched against revenue. So answer is 1 and 3. So it seems to be option C. The next question at your screen right now. An item of stock originally cost 5,000 and written down to the NRV of how much? 2,000. Is it expected loss? How it's sir loss? The cost was 5,000. NRV is 2,000. As per inventory law, lower off, we should record it at lower off. Yani the item actually or originally was 5,000, but we are recording it at 2,000. So loss anticipated or expected loss is 5 minus 2, 3,000. Expected loss must be recorded or can be recorded. Income cannot be. Which accounting concept is that one? It's Mr. Prudence. Remember, we are discussing prudence too much because too many questions are coming with this concept. The next one, a company changes from the straight line method to of depreciation to the reducing balance. Which accounting principle has not been applied? Changing method of depreciation. Is it allowed? When we were discussing the topic of depreciation, we said you cannot change method of depreciation as you like. Why? Because it's against the accounting concept. Which concept that was? It was consistency. You must be consistent. So if you do that, you are not following consistency principle and it's not correct thing. Terry, you cannot do that. Again, a question about matching concept. Any expense must be matched against against income or economic benefits. So, a machine acquired long-term rental. Its rental item is substance over form. It's not the answer. Computer equipment is depreciated. Yes, depreciation of an asset. Equipment is giving me benefit, economic benefit. Yes. Recording wear and tear, depreciation. Yes. Income and expense. Expense must be matched against the income. Computer equipment is not an income, but computer equipment is generating economic benefits for you, which is an income. So the answer is B, matching concept. Revaluation can never be a matching concept. Waste paper, revenue, recording a revenue expense, direct and expense is not Only directly recording our expense is not a matching concept. Matching concept means expense must be matched against economic benefits of an asset, yani future income. Not income, it's income. Okay, so the answer is B for boy. The next question will appear at your screen in a second. The next question is, development costs are capitalized. Yes, it's true. Development costs need to be capitalized. Where after your so the development cost is capitalized. Development cost is a cost to develop an asset. Asset we will develop. Then later on we have to amortize this expense. Expense against the economic benefit. It's which concept? It's maturity concept. Am I clear in that? Anyone have any confusion, they can contact me on my WhatsApp number, which I am writing in front of you. Save it as a rescue for accounting. And if you have any problems in your course, any course of accounting, A levels, O levels, ACCA, CA, CIMA, you can contact me. And inshallah, I am going to help you guys. Okay, anyways, now the next question will appear at your screen right now. In preparing the profit and loss, only realized profit and non anticipated profit must not be brought into account. Which concept is that one? Simple. Again and again, the same concept is examined by examiner. Its prudence concept is a favorite one. Matching concept, substance over form, and prudence concepts are the favorite concepts of examiners. The next question is, just read it carefully. What is asking? It's asking not. Not. Not means the personal spending of the owner of a business is not recognized as a business expense. Which concept is that? Simple, sir. It's a business entity concept. The next question will appear now. A business obtained machine by mean of hire purchase. Okay. Hire purchase. Which accounting concept comes in your mind when you see the word hire purchase? It's substance over form. If you go back to this video a bit, you will find out I just discussed about this concept. Next one, accounting is following, oh sorry, accountant prefer commercial reality approach, not the legal way or strict legal approach. Which concept is that? Simple. Accounting is not following the legal approaches. Accounting is following the commercial reality. IAS and IFRS. This is what? This is substance over form. The next question is, there is a great uncertainty about continuance of a business. This has caused the proprietor to make a large reduction in the valuation of the inventory. Which accounting concept is that one? Now, There is uncertainty, continuance of a business. Okay. This has caused our proprietor has to reduce the valuation of its stock. Why? Because he is not sure that he will continue. So he has to reduce the values so people cannot make a loss from his decisions. He has to bring the values of inventory to the realistic value. Which concept is this? This is substance over form. Which concept is that one? That is substance over form. The next question is again asking about prudence. The principle of prudence in the preparation of financial statement is practiced through the application of which action? We knows we can record anticipated loss, but we are not allowed to record anticipated income. This is prudence concept. So after reading all four options, what you guys think? It seems to be D or no? Yes, sir. It's very clearly says anticipated loss, and recording an anticipated loss is not other than the prudence concept. Then the next question, Arun. Arun wishes to invest in a business with a skilled workforce, which will make, okay, not now, will make profit in each of the next 5 years. Which aspect of financial statement help Arun to decide whether to invest, where to invest? Okay, now Arun is an investor. What he is doing? He is investing. Where? With a skilled workforce. So how he will know which accounts, how, which basis, which financial statement is helping you? So when we were discussing this chapter, we said that accounting has to be stay on his historical cost. So the owner can decide by looking at the history. If you are here right now and you want to anticipate the future, before anticipating the future, you must look what was the past, what happened in the company in the past. Then only an idea will come in your mind about future. So looking at the past, what does this means? Looking at the past or keeping the records properly at historical cost is known as historical cost is based on objective figure. So the answer for this particular question seems to be option B. B for boy. The next question coming appearing at your screen right now again is asking about prudence concept. Prudence means anticipated loss must be recorded. Lower of cost and NRV we just discussed many times. Cost is 2000, NRV is 1000, so we are recording it at 1000 means item was 2000, we are recording at 1000, so 1000 is the loss, and this is future loss, anticipated loss. Which concept is saying to record that? This concept is known as Mr. Prudence concept. So that are the some past papers which I selected to help you guys. If you guys found this video helpful, please like it, share it, and don't forget to subscribe my channel. Inshallah, I will make more videos for you guys. Till then, see you and Allah Hafiz.